Hey guys, what's going on? I'm Robert Montez with Link Financial Advisory. Today we are doing our weekly market recap where we focus on what happened in the market last week. We're going to go over a higher level overview of what helped the market, what hurt the market, and your key takeaways. Let's get right into what helped the market. Last week, what helped the market domestically were three main industries. Those are going to be healthcare, energy, and financials. Those industries are oftentimes viewed as more defensive sectors, and that's kind of what they were doing last week and playing a little bit of defense to help boost some returns there. We also saw internationally, other countries seem to be doing pretty well. So, for example, Germany's DAX, which is similar to our Dow Jones Industrial Average, it's an index there, hit record highs. So that was good and definitely helped globally diversified portfolios do well. What hurt the market here in the United States? A couple of main concerns. Still kind of seeing the same thing with worries about tariffs, trade wars. That's the big thing that's kind of creating some volatility in the market. We've seen tech stocks get hit pretty hard, so that's nothing new. Those are high, those are low. That's kind of the way that the world works. And we saw that people still worried about inflation. The University of Michigan has their Consumer Sentiment Index. It's a report that they go out. They kind of see where people are at as a whole. I think they call 500 households to figure it out. So it's not like the end all be all, but it kind of lets people know like, hey, are people feeling confident, not confident? When we see that that index is low, it typically means that people are going to be a little bit more hesitant to spend money, playing a little bit more defense with their money, which can affect markets. And then what's going on with tariffs? No surprise there. People are still trying to figure out, is it the best thing ever, the worst thing ever? What's going to happen long term with some of these trade wars that we see that we're getting into? So that's definitely hurt the market. Last thing was the Fed. The Fed decided not to lower rates. They maintained their benchmark rate of 4.25 to 4.5%. There are talks about that coming down in May, but as of right now, the Fed is basically saying to the United States, hey, we don't want inflation to get crazy again. We're trying to keep this squashed down, so we're not going to lower rates at all. What does this mean for you? Some key takeaways. Number one, don't panic. Volatility is normal. If you've been investing for any period of time, you understand things go up, things go down. It's part of it. Number two, understand that volatility creates opportunities. If you have a team of professional managers, they're probably making some serious moves right now to position you for when the recovery happens. So look at this as a good thing. And number three is diversification. If you are not globally diversified, you're missing out. U.S.'s economy isn't always, the shining star that we want it to be. So sometimes it does make sense to have exposure outside of just the United States. If you guys have questions, don't hesitate to reach out. We're happy to help. Thank you so much for watching. Catch you next week, Friday, and keep an eye out for some other videos we've got coming. Thank you so much.